All right, of course, the big news of the day, the country's GDP rate for the fourth quarter of last year coming in at minus 1.3%. Let's just bring that up and tell you what the numbers are like. So it's the big number of the day, 1.3% in the negative. That means that the country's economy contracted by that margin. It was worse than what economists had expected. And this coming off from that that positive number, 1.8% in July. Need not tell you that when the economy contracts, the possibility of job creation gets worse. Very quickly, let's zone in on some of the industries here that saw a hit. And ahead of this, economists had said that, look, you know, we've got huge problems with the power cuts that are turning conveyor belts in factories. We've got a logistic transport problem with the rails. Let's move on to the industries very quickly on the next page, and you'll see how this reflects in there. Agriculture down 3.3% in the negative. This is a huge part of the economy, the finance and business service sector. It still is a huge occupant in GDP, and if you look at it, that's down minus 2.3%, mining down 3.2%, and of course not the great news for manufacturing, trade or catering in that regard. I want to bring in the broker from FNB Wealth and Investment, Wayne McCurrie. He joins us now on the line. Wayne, thanks very much indeed for talking to us. I suppose it was expected that this economy would see some sort of actually muted growth or even shrinkage, but minus 1.3%, that's a disappointing figure, isn't it?
Yes, it's much lower than what was expected. It was expected maybe 0.5% down for the quarter. And look, a lot of it is cyclical. The mining has come off a very, very high base. We've had a fantastic time for mining for the last few years. Agriculture as well is coming off a high base. But the true one is, as you mentioned, finance, leisure, building and construction. This is all load shedding. I mean, we're so used to load shedding here that stage 2 is a walk in the park, but stage 4 and stage 6, and for such an extended time period without a break, that is catastrophic for the economy. So the figure for the whole year, everyone was expecting 2.2%. That's now down at 2% for the year. We still created some jobs, thank goodness. But of course, as we all know, the load shedding has gone into January and into February and into March. So it might, in fact, even be worse for the first quarter of this year. I mean, this load shedding truly is devastating to the economy.
Wayne, just to put a measure on this and some sort of context, what you essentially have is you have a muted economy that's growing much, much slower than population growth. So Stats SA says
yes,
the economy grew only 0.3% from 2019 pre-pandemic. Population growth is sitting at 3.5% in that period. Essentially, it means that people are actually getting poorer, isn't it?
Correct. And of course, people are getting poorer and you don't create jobs that match the population growth. This is all old news, unfortunately, in South Africa. Youth unemployment is, it is unbelievably high. And I mean, the government's just got to carry on paying grants because that's the only way we keep social cohesion in the country and people don't actually starve is by paying the grants. And, the COVID grants just going to carry on indefinitely. But the government, to their credit, has taken steps to try and rectify the situation. Very slow and very late in the day. But the ability for the private sector to generate electricity and the passing of the state of disaster will all help. Now, the private sector, once money gets mobilized, the effect is enormous. So in, 2 years' time, we won't have load shedding anymore. And maybe in 4 years' time, we'll actually have excess electricity because the amount of money that's being pushed into power generation, solar, whether it's wind or solar or whatever, is actually going to be phenomenal. This is the new growth area of our economy. Unfortunately, quite capital intensive and quite import intensive, but the amounts are going to run into hundreds of billions, if not trillions, over the next 3 to 5 years in South Africa. So surprisingly enough, it'll actually give a boost to our economy. You look at the bank results, the bank loan growth, they're all double digit, and a significant proportion of that is actually financing of all of these private sector initiatives.
Yeah, that's a silver lining, and hope it does get better. I want to just quickly talk to you about the fact that I saw construction also. You know, there was a little bit of a green figure here, but overall, construction is 23% smaller than it was before the pandemic. Now, Wayne, the reason why this figure stands out and this sector stands out is because much of our infrastructure plans from the president himself is based on getting that infrastructure rollout underway, seeing that people who do this find themselves in jobs. But we're lagging tremendously there. Does that not raise a flag, though, Wayne?
Yeah, look, I mean, there will be capital investment, but by the private sector more so than the government. And I would think the building and construction sector, it might be down on the pre-COVID level, but I think compared to 2007 and 2008, it's probably 70% down. And the sector has been devastated. How many companies have actually just disappeared off the scene? But of course, if there's money around and there are jobs to be done, you know, the private sector will gear up for it because they just are far more efficient at doing that than any government worldwide. So if there is money available and it's going to be spent, you know, as I said, the private sector will be able to do it. But building and construction, you know, there's no new big shopping centers. There's no new money really going into residential. And the infrastructure, even though a lot of people say the infrastructure is terrible, the infrastructure is just in bad shape and it needs money. But as I said, the amount of money going into power generation, Transnet, ports, all of this is going to get private sector involvement. So the building and construction outlook for the next 5 years, surprisingly enough, off this low base is actually quite positive.